Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 9th of August. We have just left behind us a volatile trading week, which kicked off August trading activity. We are heading into a slightly quieter week ahead of us, which starts with Chinese Consumer Price Index data for July on Monday. On Tuesday, we should pay attention to Eurozone ZEW Economic Sentiment Survey. Moving on Wednesday, US Consumer Price Index data for July will be published in addition to US crude oil inventories. On Thursday, we should be on the lookout for UK manufacturing and industrial production data and preliminary GDP quarter 2 figures. Also in the afternoon, we should get US jobless claims data. The week will finish on Friday with Michigan Consumer Sentiment Survey. Now, let's take a look at few markets. Let's start with the Bitcoin. Bitcoin had a bullish breakout out of this consolidation pattern, which is also referred to as a bullish flag. The key trading level going forward is at 40,000, which is a nice and round number. If we see a pullback to 40,000, that will be a retest of the previous resistance as a newly found support, which could possibly indicate the possibility of the extension to the upside, targeting additional resistances towards 45,000, 47,000, which is the neckline of the topping head and shoulder pattern in a daily time frame, possibly even 50,000 over a medium time frame. Alternatively, if you see a corrective pullback and a loss of 40,000, the next level of interest is at 38,870. A retest of that level from underneath as a newly found resistance could indicate a deeper corrective pullback and retest of this breakout area at 36,200. This is DAX, or German 30, which had a sideways consolidation for a very long time. Finally, on Friday, after non-farm payrolls, we saw an attempted breakout higher and possible retest of these previous swing highs towards 15,800. The price is currently supported by multiple rising trend lines. This is the shorter term one. We had a longer term one here, and also moving averages. Key trading level going forward is at 15,700. Pullback to that level and a rally or a breakout above 15,820. Retest of that level from above as a newly found support could open the way for the continuation to the upside. In uncharted territory, new all-time highs would be on the cards, possibly indicating 15,900 or even 16,000 as logical resistances. Alternatively, if we see a pullback lower and a loss of 15,700, that could open the way for a deeper corrective pullback and additional retest of support at 15,600, possibly even 15,450. This is Nasdaq, or US Tech Index, which is also uptrending quite nicely. We have a sequence of higher highs and higher lows. The reaction initially to Friday's non-farm payroll was bearish. We saw a pullback, a shorter term consolidation, but the overall trend is still very, very bullish. The key trading level going forward is at 15,000. If we see a gradual pullback to 15,000 and a rally from there, that would likely trigger some bullish reaction, or if we see a rally from the current levels and a breakout and a daily close above 15,170, that could trigger the extension to the upside, targeting new all-time high 15,300, 350, 15,400, and so on. Alternatively, if you see a gradual pullback and a daily close below 14,970, a retest of that level from underneath as a newly found resistance, that could possibly open the way for a gradual move lower targeting additional supports at 14,900, 14,820, possibly even 14,700 to the downside. Euro dollar, we had a massive correction lower after non-farm payrolls, which showed much better number than initially consensus anticipated, which triggered a US dollar strength across a range of currencies, and we'll look at the charts for FX in a minute. But euro dollar was in particular bearish. We had a big reversal. So key trading level going forward is at 1.18 area. That's a major resistance at the moment. If you see an oversold rally into that level and a rejection, or if we see a gradual move lower and loss of these lows down here, loss of 117.50, that could open the way for a deeper corrective pullback targeting 1.17, possibly even 1.1650 over a longer period of time. Alternatively, if you see an oversold bounce back and a push through 1.18, a daily close above that level, that could open the extended oversold bounce back, basically a short squeeze towards additional resistance on the upside at 1.1850. Cable had a bearish reaction as well to that US dollar strength, but we are seeing this as a bull flag formation. So this is still coiling. The price action is waiting for a trigger, and it's trading very close to the key trading level at 1.3870, 1.3850. As long as this area of support holds and buyers return and the push price higher above this falling resistance trend line and a daily close above 139.50, possibly a retest from above as a newly found support, that could trigger the extension to the upside, targeting 1.40, 1.41, 1.4120. Alternatively, if we see a dip lower, a daily close, in particular below 1.3850, that could open the way for a deeper corrective pullback, targeting additional support at 138, 137.60, possibly even lower. Dollar yen had a bullish breakout higher, therefore US dollar strength. The key trading level going forward is at 110. Pullbacks to 110 and the rally would be bullish, or a push higher and a breakout and an end of day close of 110.50, retest of that level from above as a newly found support could trigger the extension to the upside, targeting additional resistance at 111, possibly even 111.60. Alternatively, a push lower, a daily close below 109.80 could possibly trigger deeper corrective pullback towards additional support at 109.50, 109.20, 109 to the downside. Gold, massive bearish reaction, loss of this 1800 level, which was the psychological area. Key trading level going forward is at 1770 on the upside. A rally into that level and a rejection or a gradual move lower and loss of these monthly lows towards 1750 could open the way for a gradual move lower, therefore weakness in gold price, targeting additional support at 1740, 1730, 1720. Alternatively, if you see a rally higher and a push through 1770, a daily close above that level, that could trigger an oversold bounce back and retest of the previous supports as newly found resistances towards 1780, 1790, possibly even 1800 on the upside. Crude oil initial reaction was a slight push higher, and then we had a corrective pullback for the rest of the trading day. But crude oil is uptrending, supported by rising trend line, although it's not as bullish as around these levels here towards 73. So the key trading area for us going forward is at 67 to the downside. If we see a rally from current lows and a push through 69 and 70 in particular, which is a psychologically important round number, that could indicate the continuation of this upward move, targeting additional resistances towards 71.20, possibly even 70 to 60, 74. Alternatively, if we see a rally and a rejection or a gradual move lower, loss of these lows, daily close below 67 could open the way for a deeper corrective pullback, targeting the cluster of these previous lows to 65.50, possibly even 65 as a logical downside support. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.